Good morning, everyone. Yes, okay. I'm happy to be here once again. Anyway, I'm happy to be here once again. I'm here just to talk about, investing in property. The last time I came, I was talking. I think it was December, I believe, and it was about buying your first property. But this time is more about investment, and it's a very difficult subject for me to do in 25 minutes because these are things people go on for a week, weekend to learn more. So please, if I don't cover things you want to know about, just bear with me. I'll try to run through the presentation as quickly as possible to leave questions at the end so people can ask questions because it's a very wide topic and I'm not likely to cover everything everyone wants to. I'm just going to kind of run through it. The way I run this kind of presentations is a kind of a coaching kind of session where I'm talking to you, saying to you that okay, this is what are your goals? What would you be? Why are you? Why would you invest in property? What are your goals? And then the following things, what is the reality? Based on how are things with you now? And then we then go into like bit of education, like okay, these are things. And then what are your options? So you think so while we're doing the presentation, thinking about you, yourself, how it applies to you. And then after that, then what are the options and that's what is the way forward? I'm just kind of do as much as I can. But as I said, if I don't run through everything, what you want to know, you think, oh, this is too basic or whatever, please just ask questions at the end. Okay. Thanks. So my name once again is Ayotunde Abudu. I was here in December. So I'm a financial coach and property entrepreneur, which means I run my own estate agency. I'm also a developer and a landlord. I'm also a financial coach, which means I help people with managing their finances, advice, and stuff like that. I'm not a financial advisor. I used to be a financial advisor. I was a financial advisor for 10 years, do mortgages and insurance and all that, but I decided to branch out of that to go mainly into property. So I'm very passionate about property, particularly in our community. We see other people from different communities doing well, investing in property. I think it's more or less the foundation. If we decide we're going to be here, wherever we are, we should actually, sow, we should sow some seeds there and make the best out of it. So why property? Now, obviously, there are different classes of investments because property is not the only investment you can go into. You can invest in shares. You now have cryptocurrency. You can do all sorts of things. You could buy a business. But why property? Now I want to put some caveats into that. I always say to people that property is an investment and yet it's not an investment. I always say to people that see property as a business. Why? So why is it a business? Imagine, you are home. Anyway, I don't want to scare you anyway. But the thing is that why you see it as a business, that if you have a business, maybe one day your tenant doesn't pay the rent or something. Like it's just like you having a business like a shop. Sometimes you have customers, sometimes you don't. You have your good days and you have your bad days. So if you see it from that perspective, that property is an investment, you have some good days, you have some bad days. But overall, by grace of God, you're a winner. You'll be winning. So that's why to see it that way. Because if you're looking at it just from an investment point of view, you just want to put money into something and expect always to get the returns. And just sit back and get the returns. But it doesn't work like that. So that is why I always say to you that look at it from a business perspective, and it helps your mindset. Because when you look at it from a business perspective, it helps you deal with the not too good days. But then there are the good days as well. But overall, you're a winner. So why would you invest in property? Different reasons. People think capital appreciation. I guess it's the same with other investment classes because you make, prices go up, you make money, regular income, you get your rent, control. I would say to some extent, compared to other asset classes, there's a level of control when you invest in property because let's say you buy shares, you bought the shares, you're just watching it going up and down, you get your dividend. You don't have any control because you're just like any other investment. But at least if you have your own, if it's your property, you know what tenants you put in, you can make sure the house is being looked after, you could take some precautions like insurance. Okay, you might decide to insure the rent, insure the property, so you have some level of control about what happens. So maybe that's why property kind of stands out a bit to other investment classes. Um, con- Physical asset, you can see this is it. That's my house. This is mine. This I don't. There's something to that. It's easier to understand. I don't invest in cryptocurrencies because I find it difficult to understand because I like something I can, understand really well. I do shares, but less risky. I put a question mark on that. Property is as risky as any, but there's a level of risk which you can mitigate. There's some things you can put in place to stop things. So maybe that's why I say it's a bit less risky compared to other things, asset classes. So I always say to you, everyone who wants to go into that you have to set your property investment goals. Why are you investing in property? I know, like our brother said, people are different levels. Some people have one, people have two, and all that. But basically, I will always believe we should start by at least buy your first property. At least start is always good to have the house you live in. Make sure you own the house you live in. At least that's a start. And then you build on that. It's like foundation, and then you build a house on top of that. So why would you be investing in property? Different reasons, obviously. You want to become financially independent. You mean that you don't have to rely on your day's job. You have other sources of income. You want to get out of debt. You just want to clear those credit cards, loans, or whatever. You want to get out. Secure future and retirement. We're all different stages of our lives. At least you want to have something to rely on, because we all know that with pensions, some of us, those of us who invest in pensions know that pension is not what it used to be. So you want to have something to look forward to in the future. Also, as children, as even as a family with children, you want to have enough money to rely on, for your own self and for your children as well. Improve lifestyle. You want to have enough, to live on, to have a decent lifestyle. Financial freedom. You want to be financially free. Now, what is your current reality? Which means what is going on? Because you're thinking, okay, I want to do this, I want to do that. Then, we all have different financial realities, like lack of insufficient capital. Maybe you want to invest now, but I don't have enough money, the deposit. Bad credit, maybe my credit is not too good. Lack of knowledge. So some people have the money, but they don't know where to start. Debt, or mortgage, or they feel it's not affordable, or for one reason or that, insufficient income, that I don't earn enough to apply. Because what is different from nowadays is, like in the old days, when you invest in property, like when you buy a property, when you go to apply for a loan, it was just based on the rent. The mortgage broker was, okay, it's based on what that property will bring in terms of rent. But it's now different, because the lenders want to make sure that although you're buying a property with mortgage, but they also want to make sure you have your own income. Apart from the property income, you have some other income to rely on. So that is why sometimes it could be an issue. So what are the essential things to know? I'll just pick on that. So understanding your personal financial status. So everyone, we're all different, but you need to kind of say, okay, what is my situation? How are things with me? In terms of your earnings, and stuff. And part of that is, looking at yourself. Like sometimes, what kind of, we're going to go into different kind of property investment, but when you're investing in property, based on your financial status, it will depend on how you go about it. You might invest as an individual, you buy the property in your own name, or you might set up a limited company. Now, if you're a high taxpayer, that means if you earn quite a lot of money from your day's job, it's always a good idea to buy in a limited company, because you pay a lot of tax, if you're buying in an individual name. But also, there are advantages of buying in your individual name as well, because obviously there's more products and it's cheaper. But because the limited company mortgages are less expensive than the individual. So that is it. So also, that just doing what we call a SWOT exercise on yourself. You know what your strengths, your weaknesses, opportunities, and threats. The other thing I say to people is that when you go into property, because we all have our values, as we know who we are, we know what we're comfortable with, and we know what we're not comfortable with. And these are kind of things we shouldn't just dive into think. We need to think about ourselves. For example, some people like to have some level of control. Some people like other people to do things on their behalf. I'll give you an example. Invest in property. Some people are happy getting a phone call later that, oh, the boiler is broken down. Some people don't want to do that. I'm not saying it's going to happen all the time, but some people rather give it to an agent to manage on their behalf. Some people like to get, they want to get involved in it. But we're all different in our approach. And also, whatever, I'm going to come to that shortly. Whatever kind of investment we go into, we have to do what sits with us, with our values, because there are different things you could invest in, even within property itself. But whatever you decide to do, make it so it's something you're comfortable with and sits with you. Okay. So part of knowing yourself, obviously, like is to be financially aware. Is to see what happens, how what goes on affects you as an individual. We read the news about different things. It starts from you at least having control over your finances, knowing that, okay, you're able to take control of your finances, you have your personal financial statement, okay, how much do I owe? How are my assets, my liabilities, what is my income? What is my expenditure? Just have a clear idea about that. At least know where you are with your finances. And also understanding some external factors that affect you. We're reading on the interest rates that have gone up, inflation. These are the things that you have to be aware of. How does it affect you? Economic growth, exchange rates, taxes. These are all things. And when they're talking about economic cycles like recession, you hear all these words in the newspaper. How does it really affect you? So these are the kind of things it's good to be aware of, even as you're going along your property journey. So what are your current opportunities and options? So if you're going to be going into property, I think I've left one now, but add one. So you have different options, obviously depending on your personal situation. Buy to let, you could, obviously you buy, if that's the common one, people buy, they put in tenants and they rent out. There's what we call buy to flip, which means you buy a property, you do it up, and you sell. Now, I'll just kind of categorize it that people go into it for different reasons. You might be looking, it goes back to the earlier point, what I said about what are your goals. It might be your goal that, you want some extra income. So which means you might decide to go into buy to let, or you might go into what we call rent to rent. This is the new thing in town, where you get a property, you don't physically own the property. So you rent a property and then rent it out, So that's rent to rent. So some people do that just to get more income, and it could be that they're not in a position to buy a property for themselves. So that is why they might have bad credit. So that's a way in. And also it might be, buy to let, extra income. You might have medium to long term goals. Short term, buy to flip. It could be that, okay, I need to raise a large sum of money to do something. So maybe it might be, if I have the funds, I will buy, do the house up and sell to, generate some capital. So that is another option. Sourcing. Now, what I used to say to people is that the landscape has changed in property unlike years ago, because it used to be buy to let. Everybody used to say, okay, if you don't have money, that's it. Things have changed. By the grace of God, things have changed in the sense that you don't have to have property. You don't have to have money. You can do other things. Once you decide that you want to get involved in property, you could source for other people. You could find property for other people and charge them a fee. Even if you haven't got your own deposit, if you haven't got, it might be a way of you to build up your own funds. Because I believe that you should have, it's just like what you want for yourself. If it's what you want, there are other options. It's not something you can just give us, I can't do this. You can, and there are opportunities. So you could look for properties for other people and charge them a fee and use that to build up your own deposit. So that's sourcing. Joint ventures. So joint ventures is where communities come together and jointly invest. They have a situation where myself and 9 other people, we came together, we put 5,000 each. So we then bought a property, in Medway, and we rented it out, and we set up a limited company. One of them are directors. We applied for a mortgage, so the rent is coming in. We're also contributing monthly, so we're putting that money in. We're not taking, so we rented out the property. We're not taking any money out. We're building it up now. We're in process of buying another property again, because that property we bought, I believe, 2020, it's gone up in value. So we're going to remortgage and buy. So these are people, and in fact, one of the £5,000 is divided into 2. So it's not just one person. So it's like people coming together, as a community to invest. So that's what I'm trying to say, is that you might not have that large sum of money, but it shouldn't put you off. And that's why we're a community. We should start trusting one another and do things together. option and delay come. So there are different ways where you can. This is a bit complicated, but I won't go into that detail. It's where you can buy a property without owning it. Have an option to buy a property. So it doesn't mean you won't own that property straight away, but it means that at a certain time in the future, so you have an agreement with the landlord that, okay, I'm going to buy this property at a later date. And then it gives you option. Then you have control over the property at a later time. So there are different ways, obviously, you could go into investing. But the main thing is that once you decide you want to go into property, you decide what is the way forward. So what is your plan or your way forward? So I believe that for people who want to, I think the best thing is first to have, to kind of educate yourself, financial, get some financial property education, I mean, you don't have to go and spend thousands of pounds because there's a lot of courses where they charge people loads of money. But, it's always good to find out, do a bit of research or whatever you're going to go into, so you could see what suits you. Whether you want to do rent to rent, or you want to do buy to let, or you want to do buy to sell, or you want to JV with other people, it's good to first understand, looking at your own financial status. You might have that. You might have enough equity in your property, which means you could take money out and buy as many as possible. And then there are also things about where would you want to invest? What is the best place to invest? Mostly, I would say the starting point is always in terms of what your resources are. Because we all know that if you want to buy anything down south, around here, it's quite expensive. So people tend to go further north, where property prices are cheaper. But then, obviously, you have to be careful because some of those places, property prices are cheaper, but there's a chances of having not good tenants. So it's everything has its own advantages and disadvantages. There are places like Manchester, which used to be very, used to be cheap. They quite gone up in price, but there's a lot of opportunities there. One thing I'll say about property as well is, why I like property is, especially in this country, is because of the welfare state. That's why property is unique in this country. Let me give you an example. When we had a recession a couple of years ago, where there was a recession in the country. Not even that. Let's look at COVID. When COVID came, there was the market is going to crash, this, that. But what happened was, because the government were paying the wages of people, like at least you have tenants who wages are being paid by the government, or you have people where people lose their jobs, at least they're getting benefits. And once a tenant is 2 months in arrears, if the tenant is on benefit, once they're 2 months in arrears, you can apply for the government to pay the rent to you directly. So for that reason, as long as you have tenants in your property, and the rent is being paid, at least most of your worries is kind of covered. Unlike where other societies where you're reliant on the economy, whatever happens with the economy. I think when I was speaking to Pastor Tim, he said something about Nigeria. I also just talk a bit about Nigeria as well. I know my focus is here in the UK, but I mean, some of us always like to do things back home as well. I think there are opportunities, but what I was saying is that for me, back home, I will always say to people, I'm not advising, with this education, I will educate people that one of the areas I think is good for Nigeria investment is buying to sell, like whether you're buying land, you're doing buying land and selling, or you're building something, this is on the high end when you build a house to sell. But in terms of rental income, it's not something I would advise people, especially people who are based here, because the exchange rate and inflation is the main thing. You're here in the UK, you buy something in Nigeria, today is worth 40 million, the exchange rate is now 1,000, and you live here, and you need to spend the money here, So it's rather, so if you're going to be doing something there, it has to be something a bit short term, where you buy, you sell, you buy, you sell. So you can build up your capital that way. But if you're looking in terms of long term, like rent out, although having said that, some people might have a reason why they're doing that, because let's say it's your own house you plan to live in the future, you might decide to rent some part out, so you're not really relying on that money for it. It's just that you want to have people in the house, isn't it? You might build a 4 flat, you might say, okay, I'll stay in 1 flat, I'll rent out the other. So people do that, which is fine. But if you're doing it like we do here, like buy to rent, I would not advise it. But we all have our different, but I think it's more like short term. Land is good, get land, but do all your due. You know how Nigeria is. You need to do your due diligence. Make sure you have all the paperwork and where you're buying the land, so you don't have a monile, whatever. But once you get the land in the goods, buy the land, sell. I think that market is doing well. Some people are doing developments, they're building houses because there's a very high, need for housing in Nigeria, but you have to target the right market. So, in general, to conclude, I guess, like I said, it's a difficult topic for me. I really did not know what to cover because it's a wide area. I run workshops. I also advise people on a day-to-day. We do weekends. We might be on it for a week going on because there's a lot to cover in property. Because things like how to source properties, where do you get them from? Do you buy from auction? Do you buy from agents? How do you find the right location? How do you find the right tenants? How do you make sure you have all the necessary paperwork? How do you manage your properties? Should you give your property to the agent? Should you manage it yourself? How do you mitigate, when if you loss of rent, and stuff like there's so many things to cover. But I just thought, let me just quickly run through this and then leave questions for people to ask questions. You can do freelance. Ask me any question. I hope I'll be able to answer as much as I can. Thank you. No. No. The good thing about property is there's no age limit. You even mortgage, they give mortgages. Like if you're buying a house to live in, they always give a limit. Like they expect like age 70, you paid off your mortgage. So sometimes, let's say you are in your 50, you are 50, your plan, they might not give you more than 20 years. Let's say you're age 50 because they expect you to pay your mortgage off by 70. But it's not the same with buy to let. You can get a mortgage till you are 90 or whatever. Because with them, they believe the rent, there's tenants who are paying the rent. So there's no age limit. You can start anytime. Well, okay, sorry. When you said
Yes.
age limit, I thought, in terms of the age, limit in terms of
Yeah,
going
as in
older.
for
Not no, because
younger
minor, yeah, you won't be able to buy in the name. No, not for you won't be able to get a mortgage for a minor
That's it.
anyway, because you have to be 18. But what I was thinking is, like limit in terms of the age, the older age. That was what I meant. Yeah.
Yeah, you mentioned something about bad credits,
Yes.
and I know that's one of the main things that deter people from moving
Investing.
forward.
Yes.
So, what is the best way to help people of such
People of such.
to be
Okay.
able to also get well source in way? Definitely, they need to go to the bank anyway.
Mm,
So, and the bank will
yeah.
one way or the other reject them,
Yeah.
especially the high street
Yes.
banks.
Yes.
To say, ah, sorry,
Yeah.
you're good, but
Yeah.
your credit
Yeah.
is bad.
Okay. All right.
I'm not sure how
Okay,
to.
all right. Thank you, sir. The thing is with that is, you see that issue of bad credit. It's a very, I'll put in quote because it varies. Because bad credit itself, like it depends. Where some people maybe they've missed mortgage payments. Let me give an example. Some lenders, there are different lenders across the market. I don't know if I mentioned at my last one. I'm not okay. I don't. Okay, what is it? Is for example, is that let's say you default, like let's say you had a CCJ, county court judgment, 4 years ago. Some lenders would not even, they would disregard that, you know, or it's be over a period of time, or how much you owe. But they say you've just missed your mortgage payment. So what I'm saying is that historical credit, it depends on the individual circumstance. Because when we say people have bad credit, it doesn't really mean they can't get mortgages. It depends on what exactly the circumstances are. And there might be some lenders who might be able to help. So somebody who had like a CCJ over 4 years ago, they might ignore that. But what they will not ignore is what is happening now. So if you are missing your mortgage payment now, or you're missing your credit card, because what it means is that you're struggling financially now. If it's historical, let's say something happened 4 years ago, they're like, okay, this guy seems it's cleaned up, things are better. But if it's happening right now, that person will struggle, to get a lender. But what I'm saying is, whatever your circumstances, whoever circumstances are, I think you should still speak to a mortgage broker. Don't go into a high street bank. Speak to a mortgage broker. The mortgage broker will look across the market. They might still be able to help. Maybe the interest rate might be much, much higher, but maybe able to help something. But what I was saying, also trying to say earlier, that is that one's bad credit should not stop one for getting involved in property. You could do rent to rent. They, when we were that company I just spoke to you about, there was a lady amongst us who is bankrupt, which means she can't get anything. But at least, because she's done stuff with us, she's not on the mortgage. Because what we tend to do is that although there are 10 of us in shareholders, but not all of us will go on the mortgage. So we will select whoever we think is in a better position to go on the mortgage. So before this lady is bankrupt, doesn't mean she can't invest in property. But there are other ways. So I don't think that should put anyone off. Even if you have bad credit, speak to a broker, let them look across the market, see if they can find some. If not, then look at other ways. You could do rent to rent, like I said. You could source properties for other people. You could do joint. You could put money in, and. For example, just to add, there's some people who have funds but don't have the credit. And some people who have the credit but don't have the money. People, there's different circumstances. It's just finding the mix and how you can work with, whoever you can work with. Yeah.
Advice for anyone to buy partly part of a house, as in a certain percentage of them we have.
Yeah.
Yeah.
Shared ownership. Okay, I think I spoke about that at the last one I did few months ago when I was here the last time. Yes, I think shared ownership depend. Okay, I think what I did when I said at the last presentation is like I kind of graded it. How did I say? I say ideally it's best to buy yourself outright, but if you can't do that, the other option is things like shared ownership, you know, or there is help to buy. There's help to buy. But if you can't do it, then shared ownership. But it's good to at least be part of something. So shared ownership. Funny enough, the concept of shared ownership is what I was just telling you in a kind of roundabout way, where other we are coming together to invest in property. We have a share, isn't it? So it's the same kind of principle. The good thing about that kind of shared ownership is that you get all the benefits. You're not sharing with other people, although it's shared because the housing association owns part of the property. But at least just get your foot on the ladder. That's the encouragement. No matter your stance, just find a way to get your foot on the ladder. Because property is one of the few areas which I've not mentioned where you can make large sums of money within a short period of time. If you work, it's not easy to make money, going to work. But with property, with the right kind of investment, you can make quite a lot of money within a short period of time. So that's why it's encouraging to get our people to get on the property ladder. So yeah, it's a good idea. Yeah. I think I'm not sure. I said consultation. I think yeah, initial consultation is free. Well, it depends. You know why? Why I said initial? I'll tell you why. Let's say you spoke to me and say, "Yeah, I have 50,000 in the bank." So, okay, she's got 50,000. So why can't she pay me some money? Let's say you told me, "Oh, I haven't got any money." Okay, all right, she hasn't got any money. And I'm joking. Exactly. But yeah, but my own, like I said, I'm passionate. I'm passionate. I go to different within our communities. I go to churches, go to community groups. I've been invited on YouTube to talk about stuff like this. I'm very passionate, and I'm always there to encourage people. It's not so much. It's something I'm passionate about. It's not just about the money side. It's encouraging people because the more our people are doing stuff, the better for everyone. You know. So that's it.
Question, sir.
Okay.
I know you mentioned about the initial deposits,
Yes.
because even if you want to buy your first property, you
Yes.
still need to save anyway.
Yes.
And we all know in this society it's difficult to
To
save
save. Yes, it
no
is.
matter
Yeah.
what. And at times when you go to the bank and say, borrow me 20K
Yeah.
or 30K, I want to buy a property, which
Yeah.
you still need to go to them and
Mm.
get mortgage. They
Yeah.
will not even borrow you.
No.
But they say, it's like you're much of a liability.
Okay.
So what is the best way? Especially if somebody, I know you've covered that last in the
Mm.
December or so, for a first time buyer. Because I
Okay.
know a lot of people are in that kind of situation.
Okay.
They just don't, they cannot save.
You save.
Even for them to borrow is even difficult a little bit.
Mm.
So what is the best advice?
Hmm. Um, I don't know. I want to say off. No, I'm thinking. They were saying in Nigeria, say off the mic. Off the mic. I was going to say something which, okay, I'm not giving advice. I'm just saying for education's sake. Okay, so sometimes if you're buying, because I'm just telling you what the reality is. You cannot take a loan from a bank as deposit. If they lend down, they will not. But there are ways you can do it. Because let's say you took a loan. I'm just using it as an example. Some people use personal loan. The credit card, you could use credit card to pay for some of the fees, like stamp duty and stuff like that. It's allowed. But with the loans, the thing is that if you have a personal loan, you can't say, okay, just take a personal loan this month, then tomorrow, next month, you go apply for a mortgage. The lender will say, where has that come from? But let's say you take the money out, loan out ages ago, and it's in your account and you're using it, so it's part of, it could be used as part of the deposit. Generally, even things like help, they've stopped some of those schemes where they were allowing people to invest and stuff like that. It's a very difficult one, I have to be honest. But I think, just like I said at the beginning, I don't think people should be. My advice, like I said, is that if you want to do something, once you have it in your mind that this is what you want to do, it's possible. I said something about sourcing. Somebody can start looking for other people and charging a fee. It shouldn't put anybody off. You could start doing stuff for others, and generate things. All it takes is that, you go to areas, you find the property, you do all the due diligence. Some of us have skills like project management. We can manage projects for other people and charge them a fee. These are ways, I think we need to think outside the box, because no money is going to drop from, no money will come like that. You just have to kind of, work for it. We have project management. Some of us are good in things like with our hands, like there are different ways you just use what you have. But what I'm trying to say is that you shouldn't put people off. For example, I know, like, some of what I was saying, that if you have whatever amount of money you have, let's say people are doing, because I'll give an example. In our community, we used to do ajo. We do ajo, isn't it? We do this ajo partner, the Caribbean people call it, where the idea that came out of us doing this investment, that we said, okay, we do this ajo, people save £200 and all that, they 500, they take, and they just take the money and go and spend it. I said, instead of us, why don't we put it into something? So that's the way, like every month. I know, because one of the things I said when I came the last time was that another strategy of saving, we have to force ourselves to save money, is, I guess the concept most people do is that they will say, okay, how much have I got? They will pay all their bills, and then whatever is left, they will save, after you pay your tithe, whatever. But what I think people should do is every month decide, okay, how much is it I want to save? They call it pay yourself first. It's a concept. There's a book called, I think and Go Rich. There's a book that covers that. I think I'll remember, if I can remember. The idea is that whatever you want to save each month, just put it aside. That, okay, I want to save. Then whatever is left, you have to manage. It's just this discipline. Because sometimes if you say, okay, I'm going to save whatever is left, you won't have much left. So if you say, this is what I want to save, you say, I want to save, I need £2,000 by a certain time, and I'm going to save this every month. Make sure that, just take that money out, move it somewhere else. Whatever is left, you leave on. If you have to go and do some extra work or whatever, I think it's all about determination and God's grace. It's just the determination. I just think things have changed. In the old days, I don't have a deposit, I don't have it. Now, there are different people doing different things. I have a lady that I've as an agent, I've given about 5 properties, which she's doing rent to rent. She doesn't have a house of her own. And she's doing this rent to rent, and she's earning good money. So, people can work together. The other thing we have in our community as well, which we need to break, is we don't like working. We don't trust one another. We don't want to work together. Look at the Asians. They come together, they put funds. What you're saying, sir, about people not having deposits? They fund other people to do things. We don't do that. We don't trust ourselves to do that. That's why even this one I was just telling you about, where we've put 10 of us have come together, you wouldn't know how much effort. But because we want to make a statement that we can do it in our community, and we're doing it, and by God we will keep doing it. So that is what we're trying to do. We shouldn't put up. We need to kind of break the chain of us not being able to work together. So that is the way I see it. Thank you.
Thanks for those insightful words, actually. So what you are doing, I've also done a little of them, actually. So I think last 2 years ago, we brought almost 18 or 17 people together. We are able to raise $500,000 together. And yeah, so which I know the struggle, actually,
Yeah.
where everything went. trust and everything and doing. But I think we're able to start breaking it, which I think is really, really good. Now, in during the presentation, you mentioned about income. For those
Yeah.
guys that want to start, how much do we need to have for us to start a property? If, for instance, some people come to me, I want to buy a property now, but what will be my income to be able to afford a property? So I can calculate how much I can invest on that
Okay.
particular
Okay.
property.
Do you, my brother? Do you mean as buy to let, or is it buying? Because there's two different things. Or
I actually mean both of them. Actually, one for I want to have a first-time buyer right now because sometimes it's difficult for a first-time buyer to get buy to let. Actually,
oh, of
so
course.
yeah. So for a first-time buyer, I want to know I'm living in a property right now.
Okay.
Is rented out, but
Okay.
I'm going to say, okay, how much based on my income? Let's say I earn 40,000. How
Okay.
much could I?
Be
How
able
much
to
of a
get.
property will I
Okay.
get actually?
All right.
Yeah.
Okay. All right. It's going to take me back to the other presentation I did months ago because that is what I covered that. So what is it is that if you're looking to, okay, let me just quickly treat it to two different things. A property you're looking to live in obviously will be totally different from the one you're looking to invest in. The one you're looking to live in is based on the income is based. There's a multiple. I'll just give you a rough idea. It's not cut in stone. Sometimes they give more. So whatever you have, you'll be looking at 4.5 times your income. Well, let's say for example, you earn 40,000, like you said. It means if you, that's just a rough guide, you may be able to get 180,000, which means let's say you're looking to buy a property for 200,000. Let's say you have 20,000. So it means you put down 20,000, the bank will give you 180K. So that is based on your income. Now, that is why sometimes the major challenge most people have is because if you are buying around here, you can't find those kind of properties to buy here, isn't it? So that's why you have to look at all those things that the sister was asking about, maybe shared ownership, because sometimes your income might not stretch enough. So it might be looking at things like shared ownership or help to buy. The help to buy, I mentioned that at during my last presentation. Help to buy is where it's a government backed scheme where the government gives a certain percentage. They pay towards your deposit, which you have to pay back after 5 years. So you put down 5%, the government puts in 20%, and then you get a mortgage for 75%. And there's the other one as well where I believe so there's all sorts of schemes like that, but it's always based on your income. So like I said, what we say to people that if your income does not stretch enough, it means you have to look further out. Obviously you might not be able to buy around, but look at shared ownership, look at help to buy, and that is the best way of doing it. But obviously your income will limit you. Now with buy to let is slightly different because normally, okay, to start, most lenders would not give a buy to let mortgage to someone who doesn't own their own house. Although there are one or two lenders who will give you a mortgage as if so that first property they will give you a buy to let mortgage, but it's as if they will look at it not from the rental side. They will look as if you were going to live there. I think that's what you should. I'm not sure if they still do. So they will look at it as if you are going to live there. They will consider as if you are living there. They will also look at the rental side. So there are one or two lenders like that who might do it, but there are not that many. But with buy to let, income is not so much an issue. They just expect some lenders, okay, you have to earn at least 15K, or some will say 25K, from your income in order to get a buy to let mortgage. But what is most important is your deposit. You have to have the deposit to put down. Thank you.
So sorry, sorry. If I can say something a little
Okay.
bit to that.
Okay.
I think it's also more advantageous
Mm.
if you are living in a rented apartment,
Yeah.
and you want to buy the first property,
Yeah.
even if if you have it in mind that you want to rent it out, it's best you buy it as though it's your first property to
Yes.
live in.
Yes.
It's economically it works much better for you.
Yeah.
And the way they will calculate things for you as well, because it will be seen as your first property.
Do you mean, sorry, my brother, do you mean
If
is
it's the first,
is it council?
no,
The
no, no, no,
property?
not cancel property.
Okay.
It's like you've advised, if one needs to move out
Okay.
of London, if you feel London is too
Okay.
expensive,
Okay. I get what you mean.
rather than because
Renting.
if you take it out to say is buy to let, you would be expected to pay taxes on
Yeah.
it. So, but if you take it as your first property,
As your first property, yes.
it pays you better.
Yes, it makes
because
sense. Yeah.
you won't be charged for.
It's true.
And I think it's safer for the
Yeah.
first 2-3 properties just to have it individually rather than.
Well,
thinking
yeah, it
limited.
has its,
Yes.
yeah. That's why I said earlier in my presentation that there's some advantages.
Exactly.
Because people start by owning, yeah, you're right, the first 2 properties in their own name.
Yeah.
But as you go along, the more properties you have,
The
then
better,
it becomes
yes.
more complex. Especially if you earn a lot of money from your job,
Exactly.
it creates a lot of issue with tax.
Yes.
But yeah, you're right in the sense that, like I said, it's good to buy your first property in your own name, at least,
Exactly.
whatever the case. Even if it's shared ownership, if it's whatever, just buy something in your own name. If you have to go further a bit further
Yeah.
away, get it in your own name. Just buy something,
Yes, sir.
for yourself.
And also to say that the deposit for buy to let is much higher.
It's much
They will
higher,
be
yeah,
expecting
25%.
like
25%,
minimum.
yes.
Yeah.
Yes.
So it's,
Yes.
it's just, I think it's
Yes,
just best.
yes. And another thing I can say to you as well, what some people also do, this is the other thing I just thought about. People do what we call let to buy. I know people have done, in the old days, when you used to put down 5%, it was so easy. So what happens is that you move in a house, you buy the house, you put 5% deposit down, you get the house. After a year, you move out, you rent it out, you buy another one. The rest. So people do that. I know people have done that, and they've gone on to, buy quite a lot of property. So it's possible for you to decide that, in the house you're currently living in, that if you want to decide to move, you won't sell. It's best not to sell. Just take as much money out and then buy the next one. So some people have done that, you just keep moving, you don't sell the house, you take money out and buy the next one, just keep at that. So that's what let to buy is. Yeah. Okay.
Yeah. This is in 2 phases.
Okay.
We not everybody is doing permanent jobs.
Yes.
Contractors.
Yeah.
So I believe there will be some banks that give mortgages to contractors.
Definitely.
Number 2, there's some few people who might probably maybe be working in I'm just using our country for example. They work in Nigeria.
Yeah.
They have good jobs in Nigeria, but they want to buy properties here.
Yeah, okay.
So what are the charges for contractors?
Okay.
What are the charges for somebody who works in Nigeria?
Okay, all right. So for somebody who's a contract, it's kind of straightforward because obviously you expect you'll be doing your tax returns. They just need your SA 302, your tax return. And there's some lenders who target, who look at contractors. They'll probably look at your contract. Some of them, in fact, some lenders will treat you as if you are in employment. So they say you had like a long-term contract with someone. They will look at it that way. So definitely, I don't think that being a challenge, being a contractor is a challenge. So definitely, there's products out there, definitely. For somebody who's based in Nigeria, now, because you have different paths to it, if somebody is non-resident, like somebody who's a Nigerian in Nigeria who wants to buy here, that one is in the old days, there used to be a couple of lenders that used to do them because I helped some people buy properties that way. But all those lenders have left the market. So it's a challenge. Although I've been told there are 1 or 2 lenders who might do it. Sometimes I tell some of my people who come from Nigeria that why don't you approach some of those banks that have branches here? Like the First Bank, the GTB, I think. Approach those banks because you already have a relationship with them and see if they can. So those are the banks I would tell people to target. For our people who are maybe UK citizens but are doing stuff in Nigeria, there might be a possibility with that one. Because I guess if I were in that position, I'll probably make sure that to make things easy for myself, I'll probably start submitting some tax returns here. Because you probably do that. There might be some lenders who might depend on who you're working for, where they can check things out, Though the market is quite wide. There's some lenders people haven't even heard of, who might be able to do some things. But the question is, like I said, our individual sometimes vary from one to another. Sometimes it might be that you have to put down much higher deposit. For example, for somebody who's coming from Nigeria, they might have to put down 40%, compared to, we will put down for buy to the 25%, So they're all different situations. But like I said, it's worth looking. It shouldn't discourage anyone speak to a good broker. If anyone needs a broker, I could recommend one. Because I used to do mortgages myself, but I don't do them anymore. I refer people to people. So depending on, just do some research. Don't be put off that, oh, I'm in Nigeria, I'm contract. No, try. Just look into it. There's always a way. And it could be that you might not be able to do it now. You might have to wait a year or two to get your affairs in shape. The other thing I was also going to say, which I haven't mentioned, is anybody's going to be investing in property. Always make sure that you tidy up your affairs before you make applications. Because now, in the old days, when you apply for mortgages, they just look at your payslip. All banks will ask for your bank statements. So, like if you are moving money to Nigeria, if you are doing certain things, try not, maybe because they tend to ask for 3 or 4 months statements. So shortly before you're going to be putting your application in, make sure that you tidy up your affairs in such a way that, okay, what is this? This is because they want to know which money is this, who are you paying this, because if you say in your application that I've got so and so, and then they find some money going somewhere else, they'll start asking, oh, where is this money? And not only just for residential, you do it for buy-to-let as well. So shortly before you're going to be putting in your mortgage application, just make sure that you tidy up, everything that is there, they can follow through, and it makes life easier.
Thank you so much, sir. I think I wanted to say something in relation to what you were dealing with before about the banks.
Yes.
That someone living in a house currently that you own, and you want to now move out and buy another property so that you can rent the one
Rent
you
that
do
one,
currently.
yes.
And I think that the bank does something, well, maybe they still do, whereby they give you permission to let.
You get permission to let from your current lender. That's if you're not going to remortgage, because sometimes what you probably do is that you will remortgage, that house where you're living in, you will remortgage it, you take money out of it, you change it to a buy to let, and then you use it and the next one you're buying to fund the next one you're buying. But if you're not going to be doing that, yes, so you apply for consent to let from your current lender in order to rent that out. Yes.
Question has to do with immigration status.
Okay.
How long do you have to be in the country before you're allowed to buy?
I think you have to be honest, from the top of my head, I know there is some things like I think there's some status thing like some tier thing, where it depends on what tiers. I can't remember, and I have to be honest. I think I don't know if still this, because things change all the time. There used to be some kind of, you have to be within, you have an idea about that, my brother? Okay, all right.
I know a brother that actually bought his first property as a student, right? So, and that was almost 10 years ago. So, things change anyway. So, and once you have tier 2, at least tier 1 is okay, tier 2 is okay. Even as a student, you can actually get that. So, and my first property I bought is almost 2 or 3 years in this country. So it's not going to be how long you're going to be.
It's what tier of visa
you are. And even as a student, as long as, of course, as a visitor, you may not be able to. But I think as a student, right, you should be able to get a property. What they need is your source of income, and the revenue.
If I can say something as well, I think it depends on if you don't have ILR, and you are not British.
Exactly.
It depends on how long you have left on your visa.
Exactly.
They consider, regardless of tiers, regardless of whatever, as long as you have the percentage of deposit. I think there's someone that I've helped that had 25% deposit. The person is not on any tier 1 or tier 2, but because the person had that deposit, they were considering the years on the visa. And yet, if you have a good mortgage broker, there are mortgage brokers that would help you to find a way around it. So either tier 1, tier 2, regardless of that, your visa status goes a long way to dictate what you get and your deposit. If you have your deposit and you are consistent, perhaps you've been in the country for some years. They won't really bother.
I think, I agree with you. Like I've said earlier on that, I think whatever your circumstances is, just look into it. look into it. There's always something out there. I mean, people are not even based in the country still come and buy here. So why can't you live here? But it's just a question of, like you rightly said, deposit. Because you could end up, like I was saying with Nigerians, you might have to put in a higher deposit than others. You might not be eligible for some of the schemes for people who are based here longer or who have all their permanent status or British citizenship. But it doesn't mean you won't be able to get anything at all.
Quick question.
Okay.
You mentioned the rent to rent.
Yes.
What exactly does that mean? And
okay.
Is it legal or?
Well, okay. I know Goye is always interested in stuff like that. He doesn't want to get involved in illegal stuff. Anyway, it's legal. What is it really? It's where people, like, you as a landlord, for example. So rather than rent to a tenant, you could rent to a corporate entity. So what the person would do, or an individual, they will take the property. Is that what tends to happen mostly now is people do like service accommodation or Airbnb. So they'll take the property off you and maybe use it for Airbnb and pay you your monthly income. And sometimes they might do HMO. So what they do is that the house, you rent a house to them, they will convert it into rooms, and then they'll rent rooms by rooms. They will make some money off it. So they're different things. The only caveat to that is, I have to be honest with you. From what I know, a lot of people, their lenders, like the lenders might not know that they're doing that. So people find a way around it. Like, because the lender expects you're renting to a family. Like you get your buy to let mortgage. The lender expects you're renting it to a family. And the income is coming in. But they don't tend to know. The only time they'll probably find out is if they need to do a remortgage. So when they go into a house, and so, like, I have one coming where there's guests staying in the house. I will now have to have a surveyor who's going on to do the evaluation. How do we do this? So we have to make sure the guest is gone or something. So there's all sorts of, how it is. There are things going on. But all I can say is that, yeah, that's what it is. That's what it is in a nutshell.
So, sorry, sir. Also, I think, like you said, it's legal in some context.
Yeah, exactly.
If you put it down, if you write it. But not only that, I think it works for some landlords if they know that this person is giving me assured
rent. Yes.
Because many of those people that do rent to rent, what they will do is they will give you as a landlord an assured to say, I'll pay you for 12 months rent.
Yeah, exactly. Yeah.
Ahead of time. So now you are not struggling to look for tenants.
Exactly.
That person has paid me for 12 months. What's my own headache?
Yeah.
So that person will then be the one sorting out.
Yeah, it's
but
true.
it's a business.
It's a business.
And some people are making good money.
Yeah, they are making good money.
Especially in London.
Yeah. And also, just to add to what you said, it gives people assurance. And then, some of our landlords also want their house. I have one where some cases where the house, maybe they had tenants who messed their house up. So when they give to these companies, the house always tends to be, that's if they're not doing HF. They say they're doing it for like service accommodation. The house is always given back to you, even in a better state than you gave it to them. Because they have to stage, they have to make the house look very nice. So if you're going to be using it for Airbnb or service accommodation, the house has to be of a certain quality. So in most cases, when you give your property to these companies, the house is always probably kept in a better condition than if you were to give to tenants. And it's less maintenance as well, because some of the basic maintenance they will deal with. The only times they will call you is if the boiler is broken down. So they take care of most of the stuff. The only thing they probably do is that sometimes the rent might be slightly lower, because they will do they'll send a long-term contract. Say, okay, we'll do 2-3 year contract. And the rent might be slightly lower than if you rent out to a family. It takes the stress off you, So yeah. Thank you.
Property maybe like central London, old council property.
You mean, okay, is it where the council, is it right to buy, or they just buying the house because it's an old council property?
Like buy old council property around maybe London Bridge, Tower Bridge.
Yeah.
Or the price of property in that area because of the development going in that area.
Okay, but is it right? Is it
for buy to let?
No, no. Oh, it's buy to let, not right to buy. Because you know what I'm asking is there's a different way to it. Because some of our people, a lot of people live in those parts and they have the right to buy to those properties. But if it's buy to let, where you think, okay,
people buy for investing.
For investment, okay, all right. Well, I think it's a good idea. The only thing though is, if you're going to be buying in those places, just make sure that I guess if it's things like flats, make sure you check all the things with the leases and service charge, because some of those properties, the service charge is a killer. They will have major work. They'll just hit you with some major work bill. They will say 20,000. We have to, and all that stuff. So you have to make sure it's good. Just that you have to make sure, even flats generally, whether you're buying flats, even to rent, to live in, or to just make sure your solicitor does a thorough job and checks everything out, because that is the danger with some of these properties. It's a service charge and ground and major works. They always bring these major works every couple of years. They'll have some major works to be done, but it's a good investment. It's not. I will not put anyone up, because London is becoming scarce. In fact, I always say to people that if you own anything in London, don't sell. If you want to move out, if you decide I'm fed up of London, rent it out. Take as much money you can take out of the house, but don't sell. Because these are properties that I will tell you years to come. In fact, most times that once you move out of London, the likelihood that you won't be able to buy again. Because let's say you live in a house now, they say your house is now worth 500,000, and the reality is that why you might think that, okay, there's a chances of you buying another property for that price. Over time, that property you find for 500,000 might be worth £1 million. I know the house where I was, because the house I was born in, I think my grandfather actually owned that house. I think in the 60s, or maybe 13. He must have bought it. Maybe, I don't know. Those days, maybe 2000. My grandfather was based in Nigeria. I was a cocoa merchant. He bought a property. My parents and we were living here. And then what happened was that when we were going back to Nigeria, those days in the 70s, my dad sold that house for maybe 13,000 or something. That house is probably worth about 3 million now. And when I came back to England, I had to start looking for council flats. So the thing is that whatever it is, don't, even if your children, your grandchildren, don't sell. Don't sell. Hold on to it. Because the way things are going, it's going to be scarce. People are going to be moving further. As you can see, where I am, because I do a lot of, where I manage properties, my estate agent is based in Kent, maybe Chatham, that area, Gillingham, and all those places. People are coming from London. The prices are just moving up. And people are moving like that. They're going all the way to Sittingbourne, going towards the coast. So people are moving further out from London into Kent, and it's going all this way, all the way there. And that's the way things are going to be, because this country is an island. We don't have enough, there's not enough properties to go around. So if you think, because of scarcity, and because they've got this brown belt, you can't build on a green belt. You can only build in certain parts. They've got the planning restrictions. So because of that, there will always be shortage. If you travel up north, let's say you were going on a train to Peterborough, you see development springing up. But if you go further down south, you hardly see parts where they're building houses. Up north, they're building houses because it's so easy to find land to build. Kent is difficult because there's scarce land. And I do chair some group where we're looking like social housing and stuff, because I'm involved in different schemes. And I heard, because we call it Kent Community Hub, there are people looking for land. Land, you can't find land down around this area, all the way for, even London. So that's why people are extending. We have a house, you're going into the basement, you're going sideways, you're going up, because there's nowhere to go. And that tells you, so that will tell you that house that you have is priceless. You should not sell. Because land is premium. You will not find land. So that is why, wherever it is, just hold on to it. Don't sell. Even if you have right to buy, try to buy the property, please. For our people, that's one of the things we missed out on. I started my journey with right to buy. A lot of us started that way. We used to live in a council flat. We had the opportunity to buy, and when we built from that. And I think if people should still, I know the challenge people have now is that when you have the right to buy, so this is where people have their council flat. The council gives them the right to buy. That house is now worth 600,000. And then you go to the council say, well, they will give you 100,000 discount, but you need to get a mortgage for 500,000. I mean, how are you going to get a mortgage for 500,000? And that's what's happened. Places like Hackney, places that people don't used to want to live, Peckham, all those places that people used to say, oh, Nigeria, whatever, those places are now worth a lot of money. Because what is happening is that there's what we call gentrification. The lot of, white working class, white professionals are moving into those areas, and, people from ethnic backgrounds are moving out, and they're pushing the prices out. All those places like Peckham, Hackney, all parts of London. So please, that's my advice. Thank you.
Yeah, sorry. If you don't mind, do you want to talk about the buying the lands and the process of building on the land?
that one is way. It's not as easy. Yeah, we can have a chat about that one. For you to be doing that kind of level, I need to charge you. No free consultation. Thank you. I've enjoyed coming like I did the last time. God bless you. Thank you.